Welcome back to the Deep Dive. Today we're taking a serious look at a project aiming to really shake up how we get paid, how institutions move money. Zebec Network, or ZBCN.
Yeah, it's a big ambition.
Definitely. This whole deep dive centers on, well, modernizing how money moves globally.
Yeah.
We're talking about getting rid of those old clunky batch processes.
Like the biweekly paycheck, right? That feels ancient sometimes.
Exactly. Replacing it with continuous real-time streaming payments. And, you know, they're not just starting from scratch here. They've got some serious backing.
$35 million in investments, Coinbase, Circle. The heavy hitters are involved.
Right. So our mission today really is to cut through some of the noise surrounding Zebec.
Yeah, because there are definitely mixed signals. On one hand, you see this really strong real-world utility. They're making smart moves on compliance, partnering with traditional companies.
But on the other hand,
well, the token, ZBCN, its recent market action, it's showing some serious volatility, some technical warnings you just can't ignore. We need to figure out which story holds more weight long-term.
Okay, so let's start with the core concept. What exactly is money streaming or continuous settlement?
Think of it like this. Instead of a big chunk of money hitting your account twice a month, it's more like a constant trickle. Funds transferred maybe by the second, usually in stable coins like USDC.
So no more waiting for payday, essentially.
Pretty much. It smooths out what used to be a real bottleneck, you know, both for the employer managing payroll and for the employee waiting for funds. It just becomes this smooth, instant flow.
Okay, so the main driver for adoption here seems to be payroll. That's their bread and butter.
That's the core, yeah.
And the benefit for employees is pretty obvious, right?
Yeah.
Getting paid basically as you earn. More flexibility.
Huge flexibility. Instant access to wages earned today. Think about the stability that offers, especially for international teams or folks living paycheck to paycheck.
Right. And this is where that Web 2 to Web 3 bridge you mentioned comes in.
Exactly. Take their payroll app, WageLink. To the user, it looked and feels like a regular fintech app. Familiar, easy to use.
But under the hood.
Under the hood, it's got that Web3 real-time settlement engine doing the work. And it's not just theory.
No.
WageLink is already processing over $300 million in annual payroll volume.
Well, for who?
Mostly U.S. charter schools right now. So real businesses, not just crypto-native companies. That's significant adoption.
Okay, so the money streams in. How do people actually spend it easily?
That's where the cards come in. Zebec Silver and Plaque cards. They're non-custodial, multi-chain.
Supported by MasterCard.
Yep, supported by MasterCard. So you can use them anywhere MasterCard is accepted. They link up with Apple Pay, Google Pay.
So you're spending your crypto, but it feels like spending regular money. Yeah. Like dollars or euros.
Exactly. Instantly converted at the point of sale. USD, EUR, GBP globally. It removes that friction of having to cash out crypto first.
Makes sense.
But, you know, even instant payments need good plumbing. Reliable data transmission.
Ah, okay. So money streaming needs constant, secure connectivity.
Absolutely. And that's often lacking precisely where financial inclusion is needed most, right? Underserved regions.
Is that why they're moving into DePIN? Decentralized physical infrastructure. ZepNet. Seems like a big pivot from just payroll.
It's a major strategic expansion, yeah. They teamed up with World Mobile.
World Mobile, okay.
To launch ZebecNet. It's a decentralized eSIM network, data only, but specifically optimized for these real-time financial transactions.
So providing connectivity for the payments.
Right. Across over 70 countries, they're basically building their own reliable rails for the money streams, especially where traditional telecom or banking is weak.
So they're handling the connectivity, the data management. You mentioned point-of-sale systems, too.
Yeah, they're building out proprietary POS systems as well. It's about controlling the whole chain.
Securing it end-to-end. From the employer hitting send to the swipe at the terminal.
You got it. And to make that work for big companies, they need flexibility in which stablecoins they use and reassurance about regulations.
So what stablecoins are we talking about? Beyond the obvious, like USDC.
Well, USDC is the foundation, obviously, but they also support PayPal's PYUSD.
Which is a big deal for mainstream recognition.
Definitely. And strategically, they support Ondo USDY. That's a yield-bearing stablecoin.
Interesting. So potential for earning yield on payroll funds or treasury holdings.
Exactly. It adds complexity, sure, but massive potential value for institutions managing capital within the Zebec system.
But yield often brings regulatory scrutiny, doesn't it?
It absolutely does, which is why their support for fully compliant options is critical, like URAU.
The Euro stablecoin.
Yeah, the MiCA compliant Euro stablecoin.
Yeah.
Backed by giants like Deutsche Bank's DWS and Galaxy Digital.
Wow. Okay. Traditional finance backing.
That's essential if you want to break into European enterprise markets, shows serious regulatory homework. And that leads us straight into what might be their biggest competitive edge, compliance.
Right. If they want to bridge Web 2 finance, they have to look squeaky clean regulation-wise.
They basically need to reduce perceived regulatory risk down to almost zero for these big companies.
It's definitely central to their story. So what are the specific steps? What are they actually doing on this compliance roadmap?
Well, they're deep in the SOC2 audit process.
SOC2. Okay. And that's for?
That's huge for institutional partners. It proves their software handles sensitive customer and financial data securely, meets strict criteria. They're targeting completion for August 2025.
Okay. A key date then.
Absolutely. It's almost a prerequisite for serious fintech partnerships. And at the same time, they're going for MiCA approval in the EU.
MiCA, the big European crypto regulation.
Yeah, exactly. Expected around September 2025. Plus, they acquired Gatenox.
Wait, Gatenox.
To bring advanced KYSAML tools in-house. Know your customer, anti-money laundering, more control over compliance checks.
Okay, so SOC2, MiCA, in-house, KYSAML.
Yeah.
These are massive kind of centralized compliance efforts. Is there a trade-off here? Are they sacrificing some of that Web3 decentralization ideal?
That's the calculation, isn't it? You can't expect major institutional money to flow onto infrastructure that regulators might shut down tomorrow. So yeah, they likely trade some pure decentralization for that compliance rigor. But that rigor is what might unlock the really big capital.
And there's evidence institutions are okay with that trade-off.
Well, look at Uphold. They reportedly hold $100 million in ZBCN tokens. That's a significant institutional bet, suggesting they see the compliance roadmap as a strength, not a weakness. A sign of long-term viability.
Okay, that makes sense. And it helps explain their partnerships too, which seem very focused on real-world assets, RWAs.
Precisely. Look at the Algorand integration.
Why Algorand specifically?
It's highly strategic. Algorand is built with ISO 2022 compliance in mind.
ISO 2022. What does that mean practically?
Think of it as the modern language for financial messages between banks globally, replacing older systems like SWIFT.
Ah, okay.
By integrating with Algorand and aligning with the standard, Zebec is basically saying we can talk directly to traditional banking systems seamlessly. It removes friction for institutions moving money internationally.
And then there's the partnerships with actual payroll companies. That seems like the ultimate validation.
Agreed. The work with Azure HCM is potentially huge.
Remind us, Azure HCM.
They're a big human capital management platform, serve about 4 million customers in the US.
4 million? Wow.
Yeah. And Zebec is building a stablecoin payroll tool specifically for Azure's clients. This is crypto potentially reaching the payroll systems of millions of regular people.
But okay, playing devil's advocate here. Given how volatile crypto tokens can be, how comfortable are companies like Azure, really, moving critical payroll onto these rails, even with compliance papers?
That's the core tension, right? They're relying heavily on Zebec's guarantees, the legal frameworks, the audits like SOC2. That audit becomes like an insurance policy for them.
Okay.
And these partnerships often start smaller, pilot programs, maybe with a subset of clients first. They test the waters, see the efficiency, the cost savings.
And those savings can be a big incentive.
A very powerful incentive, yeah. It helps offset that perceived risk from token volatility.
Got it. And they're not just sticking to one blockchain, right? Still multi-chain.
Oh, yeah, definitely. The recent partnership with Octospace, adding OCTA tokens to the Zebec Crems, that brings them up to, I think, 15 supported blockchains?
15. So they really want to be a universal hub.
A universal payment and settlement hub, exactly. Not just tied to Solana or Algorand or any single chain. Okay, so let's pivot now to the ZBCN token itself, the actual fuel for this engine.
Right. This used to be ZBC, and then they did a token split.
Correct. A 1-to-10 split. ZBC became ZBCN.
And the official reason was about gas fees and utility.
Yeah, technically it simplified the gas structure, aiming for 1 ZBCN per transaction. And it broadened the token's use case beyond just payments into the DePIN side of things.
Makes sense functionally.
But strategically, that 1-to-10 split also has a psychological effect, right? It creates unit bias.
Meaning the price per token looks much lower.
Exactly. And the gas fee looks numerically smaller, just 1 ZBCN, even if the value is proportional. It feels cheaper to transact. It's a pretty common tactic to boost user experience and adoption.
Clever. And the total supply is now
100 billion ZBCN max supply.
Okay, so beyond the price perception, what actually drives demand for ZBCN? What's its utility?
Several things. Governance is one. They have a hybrid DAO model, needs a 33% quorum for votes.
Okay.
More importantly, it's used for gas fees and bridging fees across chains. And this feeds into a deflationary aspect.
Like burn mechanism.
Yeah. A portion of the network's transaction revenue, about 1% of the total generated from those continuous streams, gets burned.
So constantly reducing the supply over time.
Gradually, yes. The frequency depends on network volume, but it's a built-in deflationary pressure against that 100 billion max supply.
And what about incentives for just holding or staking the token, locking it up?
They're pretty aggressive there too. Staking APY is currently around 15%.
That's quite high.
It is competitive.
Yeah.
And holding ZBCN unlocks premium tiers of their products, like the Zebec Instant Card, which has higher spending limits. Plus, rewards programs, you can get up to 5% back in ZBCN when you spend using the card. So lots of reasons to hold and use ZBCN within the ecosystem.
They've definitely engineered the token to be central to accessing the full suite of products and benefits.
Okay, so here's where, as you said, the rubber meets the road. We've got this strong utility story, compliance focus, real-world partnerships.
A compelling long-term narrative.
But the market data right now tells a kind of confusing mixed story. This is where it gets tricky to interpret.
It really is the classic friction, isn't it? Long-term fundamentals versus short-term market sentiment and trading patterns.
So what's the bullish case based on data?
Well, look at staking. Over 4 billion ZBCN tokens are staked.
4 billion. What's that in dollar terms?
Roughly $22 million worth locked away. That's a pretty significant vote of confidence from holders betting on the long term.
Okay. Any technical signs of strength?
Technically, yeah, there's been some resilience. Signs of vertical accumulation near recent highs, and importantly, a bullish retest of a key support level around 0.0042. Holding that level is seen as positive.
Okay, but the flip side, the cautionary signals.
The short-term picture definitely warrants caution. Recent technical analysis flags bearish sentiment pretty strongly.
How strongly?
Like 10 technical indicators suggesting sell versus only 2 suggesting buy in some recent snapshots.
Oof. Why such bearish short-term pressure?
It mostly traces back to that huge run-up they had earlier in the year. Remember that massive surge back in May?
Yeah, it went up a lot, fast.
Like 395% fast. That pushed the RSI, the Relative Strength Index, up to 77, severely overbought territory.
Meaning a correction was likely.
Almost inevitable. That kind of vertical move attracts intense profit-taking. So the price came down significantly from its May 30th high, which was around 0.00712. That sharp rise and fall creates volatility, scares off short-term traders.
Right, so if we try to filter out that short-term noise, look past the recent volatility, and focus on the bigger picture, the compliance, the partnerships, the ecosystem growth.
Yeah.
What's the outlook?
Well, looking at long-term forecasts, and you always have to take these with a grain of salt, they're just models. But they suggest that if Zebec keeps growing its ecosystem, and critically, if they hit those compliance milestones like SOC2 and MiCA,
Big ifs.
huge ifs.
Yeah.
But if they deliver, ZBCN could potentially reach somewhere around 0.00619 by the end of 2025, and maybe climb towards, say, 0.0146 by 2030.
So potential upside, but heavily dependent on execution, especially on the regulatory front?
Absolutely. Success is totally contingent on delivering on that compliance roadmap and keeping those big institutional partners happy and engaged. #outro.
Okay, so let's try to synthesize this. What does this deep dive into Zebec Network mean for you, the listener? Trying to make sense of it all. It really comes down to this powerful duality, doesn't it?
It really does.
On one side, you have this incredibly aggressive, tangible build-out. They're not just talking, they're doing. Building serious compliance infrastructure,
right.
Launching real-world products like Payroll and cards that people are actually using.
Millions in volume, yeah.
And even expanding into physical infrastructure with DePIN, the Zebec Net eSIMs. They are clearly, undeniably targeting enterprise and institutional adoption.
But on the other side, you have that strong utility clashing head-on with the realities of the crypto market. Short-term volatility, technical signals flashing caution after that huge run-up in correction, high friction for the token price itself right now.
So the final thought maybe revolves around that compliance piece.
I think so. That intense focus on regulatory rigor, getting the SOC2, getting MiCA approval, aligning with ISO 2022, that's their big bet.
A central gamble.
Exactly. So the question for you to consider is, how much will this enterprise-level compliance truly differentiate Zebec? especially in crowded spaces like RWAs and DePIN, where many projects still kind of operate in regulatory gray zones.
Can that compliance, which costs a lot of time and money, be the key?
Can it finally unlock that sustained, predictable institutional demand they're aiming for in the second half of 2025? Demand that could bring stability that retail trading alone just can't provide. That's the narrative to watch closely.